It's always been the safe plan, sending every extra dollar you have to pay off your mortgage. It sounds responsible and it feels productive. And for a long time, it was always the advice we heard growing up. But here's the question I want you to ask yourself today. Is it still actually safe, or is it just familiar? Here's the truth. When you send every extra dollar to your mortgage, whether it's $100 a month or $1,000 a month, that money does one job. It reduces your principal balance on your mortgage, which on paper does sound great. But what happens next? That cash is locked inside your house forever. You can't use it unless you sell or refinance your property. There's no flexibility, there's no tax advantage, and there's no opportunity for growth. And even though you're paying down your debt, that interest, it's not tax deductible. So your money is now working for the bank, not for you. Now, I'm not saying that paying off your mortgage is wrong. After all, mortgage free with Erica V. But I am saying that it's now time to take a look if it's still the smartest move. Back in the day, I'm talking 80s and 90s, mortgage rates were 18% or higher. That's a huge incentive to pay down your mortgage quickly. But today, even with the most recent increases, most Canadians are sitting around 5 to 6%. And many who locked in earlier are even paying less. Meanwhile, long-term investment returns in things like dividend-paying ETFs or real estate often outpace those interest rates. So if you're putting everything you've got into your mortgage and just skipping investment opportunities, you might be falling behind without even realizing it. Let me give you an example. Two homeowners, same income, same mortgage. One puts $1,000 extra towards their mortgage every single month. Over time, they pay it off a bit faster, which is great, but they're also missing years of potential compound growth. The other homeowner, they also pay an extra $1,000 a month, but they've set up a re-advanceable mortgage. That means that every dollar they pay towards their principal becomes available again through their line of credit. Now, they use that credit to invest in an income-producing asset, and because they're using borrowed funds to invest, the interest becomes tax deductible. So now that money, it has two jobs, paying down the mortgage and building a portfolio for their retirement. And over 15, 20 years, that is a complete game changer. Now, let's not forget the emotional piece here. I work with a lot of clients who come to me stressed out. They're doing all the right things, sending extra payments, avoiding debt, being responsible, and they still feel like they're stuck. Their savings accounts are empty, they've delayed any investments for their retirement, and they're terrified of tapping into home equity later, when interest rates might actually be higher. That's actually the part that people don't talk about. Paying off your mortgage doesn't guarantee financial freedom. It just means you own your house. But if you don't have liquid cash or a growing portfolio or retirement plan, you might feel secure on paper and still be stretched thin in real life. I had a client just like that. She came to me absolutely determined to be mortgage-free in 10 years. And I get it, it's a huge milestone. But when we looked at the numbers, she realized that she was sacrificing her cash flow and missing out on real opportunities to grow her net worth. So we restructured her mortgage, set her up with a re-advanceable product, and implemented the Smith Maneuver strategy. She's still on track to pay off her home in the same amount of time, but now she's investing $800 a month, building a tax-advantaged portfolio, and finally feeling like she has room to breathe. And no, we didn't even increase her monthly budget. Same house, same payment, completely different outcomes. Now, I want to be clear. This isn't talking about taking on more risk. This is about understanding your options. Strategic debt, when used properly, is not dangerous. It's what the wealthy use, and it's what's always been available to you. The key is having the right mortgage product, the right structure, and the right plan that aligns with your goals. And of course, the right person to help you out. If you've been taught your whole life that the only safe path is to pay it all off, I want you to pause and ask yourself, is that strategy actually giving you peace of mind or just keeping you busy? Because here's what safety really looks like today. Cash flow you can rely on, access to capital when you need it, and a plan that works for your lifestyle, not against it. If your mortgage is your biggest expense, let's make sure it's also your biggest opportunity. Let's build a plan that reflects your real goals, not just what someone told you back in 1993. Don't forget to like and subscribe. Mortgage Free with Erica V.